Hi there. Thanks for tuning in. Today, we're going to be doing an analysis and valuation of SharkNinja, ticker symbol SN. And what are they? I found this slide quite interesting because they're like, we're the people who build a consumer problem solving engine. We solve consumer problems that others either do not see or are unable to solve. We create five-star rated innovative lifestyle solutions. So they're a lifestyle company. They're a consumer discretionary company. They do a bunch of products that go all over your house. 5.5 billion in net sales. These net sales have grown a lot from 2008 to 2024, a compounded average annual growth rate of 21% in 35 different markets, all sorts of patents, and it's just growing. So here you have a basically a duo of brands, Shark and Ninja, which have all sorts of subcategories, and they have new product subcategories coming out every so often. 2.9 billion in net sales from Shark, 2.9 billion from Ninja. So very, very close by, right? In terms of the pieces of the pie that are taken over by these. Now, if you look at all of the stuff that they sell, it's basically around the home. So they have mops, vacuums. I think Shark is very well known for all the different kinds of vacuums that they do. They also have fans. Now they got into skincare stuff. I see these masks that people can put on that supposedly you leave them on and then it's a skincare thing. And the Ninja is very well known for its blenders and food processors, but they have all sorts of other stuff. They have grills, they have air fryers, which are very popular as well. So, yeah, if you want a lot of different things for the home, then Shark or Ninja will be things that you will consider purchasing. And they sell on the mid to higher end of the spectrum. So it's not necessarily a brand such as, if I could think of one, maybe Hamilton Beach in terms of blenders, which sells all the way from the lower end to maybe a little bit of a nice blenders, but um, this is only that higher end usually. How do they do it? Apparently, their moat comes from being innovative, getting those patents going on. Because they have a larger global supply chain, then they're a little more flexible with how they can source things. They have this always on 360-degree marketing. They always have influencers going on and raving about their Shark or Ninja products. And then their omni-channel distribution. This simply means they sell through websites like Amazon. They sell through their own websites. They sell through retailers. They always have their sort of marketing going and maybe doing affiliate marketing. So they have a lot of different ways of distribution, and they're saying this all feeds on each other and gives them this competitive moat, which sort of, yeah, right, but at the end of the day, your moat also can come from having products that no one else has. The patents do create that a little bit, but at the same time, there are competitors out there, and we know this. They do have a global agile supply chain, according to themselves. So they have diversified supplier networks across Southeast Asia. This is cool. It would have been cooler a few years ago when there just weren't tariffs across the board here. But now some countries got it easier than others, and they still got high tariffs. So that's not fantastic necessarily. It's not like they can now say, we're going to move things from China to Vietnam, which would be better. But at the same time, it's not tariffless. So it seems like they have simply raised prices on consumers and they've managed to keep their margins there by just raising prices, but they are going to be affected by trade wars if those happen. So just good to know. But at the same time, it's also good to know that they have good relationships with people all across the globe and that they have many places of which they can source their parts. Sometimes you see that people have problems with who they're sourcing from. That diversification makes them a little more flexible. They also have growing market share in their existing categories, apparently. So, robot vacuum, iRobot left a huge gap here, and they've been filling it, for example. Blenders, apparently, they've been gaining market share here. Plenty. Air fryers, a ton as well. Vacuum cleaners in the UK, food preparation, air fryers, multi cookers. So it seems like they have been growing a ton and having a little bit of that network effect as well, right? If they have more retailers that they're selling to, they can dominate with further market share, and they have that network effect where if it's good reviews, I can say, hey, I really, really liked my Ninja air fryer, try it out. So this seems to be boding well for them right now. and it shows a little bit in the finances. As of right now, their net sales are going to say by 2025 are going to go up between 11 to 13%. So that's wonderful for them. And they're going to dilute shares a little bit. This is important. They don't buy back shares, they dilute a little bit at a time. So if you're an investor, just know that your ownership percentage is going to go down as time goes by because they're issuing new shares. However, they are a profitable company. So if your dilution is less percentage wise than the earnings and what they're giving back to you, then it doesn't matter as much. So that's important to note. Their net income is not as short up as it was last year, perhaps. But that doesn't matter. And regardless, they're having capital expenditures here. They have positive free cash flow. We love to see that. Their capital structure is also pretty decent. So they have a little bit of net debt, but their debt to EBITDA is not that much. It's 0.6 times. So it's good because they're probably able to very easily pay that off. And when you're not that short up, even the worst case scenarios, you have a lot of flexibility there. And I'm sure they have a revolver, which they can bring up if need be. So if you look at the data that's been publicly available, which goes back to 2020, you see these really good growth rates. 2022, everyone had inventory issues, so some of that stuff happened. But if you see in general, their margins are improving kind of across the board. Their return on invested capital is positive and looking decent. So it's a company with very impressive results, very impressive growth, and it seems like that growth is going to continue. So let's put it in a model. So in terms of discounted cash flow, their revenue right now, they turn about 4% of that to free cash flow. Let's just say they improve on that. So they go from 4.5% to 5% to around 6% by the end of 2028. And then they're growing revenue at about 10%. And then I'm going to say that in perpetuity, then this revenue will grow at about 5% per year. That's just forever, which is much nicer than the world economy is going to grow. And I'm just saying it because they're a younger company, they're trendy and whatnot. So I think 5% is about fair. And if we divide that by the total number of shares out, we get a fair value of $45 per share. However, if we subtract the net debt, which we got from this previous slide, then we get a value post debt of $40.96 per share. So let's see what the value of SharkNinja is right now. And wow, not even close. So if you'll see in the last year, actually, it's been kind of flat if you had it at the beginning of the year. But there were points here where it looked a lot more interesting. Nearing this 60s level, I would have been very interested, actually. Even if this value is a little lower, well, you could say, hey, if I really believe in the growth of this company, I believe it's going to grow closer to 8% or something. Or in the recent years, in the near years, 2025, 2026, it'll grow 20% instead of 10%. Okay, great. You could make a case for investing in the 60s level, but it's gone up since. And you see this little dip here, but in the bigger picture, is it enough to justify buying it? I'm not sure, right? It's still a $15 billion company, so not that big. A P ratio of 30, though, pretty short up. So that's important to know. It's kind of all good except the valuation. The stock is priced as if it were to grow 8.5% in perpetuity with the model I roughly have. You could also argue that they could really improve those margins, really improve that free cash flow, even if they're not growing at 8.5% in perpetuity or a crazy 25% every year. Um, this is still unlikely, though. Investors may enjoy strong returns for a while, but with very lofty growth expectations comes the potential for big disappointments, and that's where you see huge dips because they're not able to deliver on these super lofty growth promises. Going from 15 billion to 100 billion is not nearly as hard also as going from 100 billion to 500 billion or a trillion. So that doubling becomes harder the bigger you are. I would still love to buy this during a dip, though. I like their diversification and global footprint, and yet they still have a lot of competition out there. So the trend may change. You see companies in a lot of household stuff that trend, and then they're not as talked about. If we're talking about blenders, those bullet blenders. I mean, I'm sure those companies still make a lot of money, but they're not really as talked about as they used to be. And in fact, there are still many people that will just straight up go for a Black& and Decker blender, for example. That's what I have. I really like it. It was a great gift. So, in general, I think they're not as strong of a moat as they maybe claim that they have. And if the quality starts dipping, if the reviews start getting worse, you could see this trend change very quickly, and the investor expectations being more negative could depress the stock price very quickly if you buy it at a higher level than you think it's actually worth. So, I guess the lesson here is that the lofty valuations mean you're taking higher risk. If you're buying this company at $200, you're taking a much higher risk than if you buy it at 50. And if you don't feel comfortable with the valuation, with the growth expectations, then maybe you should just sit and wait, which is a great decision to make sometimes as an investor. Now, I hope you learned something with this video. If you enjoyed this video, don't forget to like and subscribe. You can also request a stock, and if I find it interesting, I'll take a look at it. So, thank you so much for watching. Once again, please like and subscribe, and have a great rest of your day.